Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin. Well, we had an up week in the market. As you can see here, this is the weekly chart of the S&P 500, and you can see right here we had an up candle. This is a week, okay? So last week was down, this week was up. I mean, we basically just, we're back where we were 2 weeks ago. So, and then you could even argue we're back where we were 3 weeks ago, roughly. So anyway, that's kind of the way a sideways trend works. Although this looks like it has an upward bias to it. You can see a slight, upward kind of movement to it. When you're in a sideways market like this, there's not really much to do except wait till we see, it's like a tug of war, right? Wait till you see one side or the other getting a little bit more movement in the direction than the other side's getting. So that right now the bulls and the bears are equally positioned in the market, and there's not much movement consequently. In the VIX, we've got this green line here. This is the line that we've had on here for a long time now. This goes back quite a ways. We breached it here briefly in this area, and kind of got below it, but then quickly got back above it. And then you can see here this upper line here seems to be holding as resistance. So what's interesting is it kind of comes up and comes right back to the green line, and of course it's narrowing. If it comes all the way to the green line next week, that means the market will be going up some. As you can see from this view of the VIX, there's not much that it can go up unless it breaks this line and goes lower. So if we see this come down to this green line, if we see that next week, then that'll correspond to some upward movement in the market. So, and we've talked about that before. That's the odds favoring position. Typically, when a market is in a trend like we've been in for, you can see how long, 7 years or whatever, the odds are, probabilities are that the trend continues. So we would expect that to continue to happen. Let's look at the 10-year Treasury, the interest rate. This is that low right here that we've been focused on. And you can see that we pulled back, really not quite to this support area that we had drawn off this low. So this low right here corresponds to this support area right here. And it didn't quite pull back that far. But then we got a pretty strong sell-off in the bond market, which led to this rally in interest rates. And right now we're currently at 1.938%. Now, if this is in fact this low that we've been looking at way over here, if this is in fact the low, and this is the first pullback off the low, then that means that this next move could be quite significant. And let me show you. I'll show you what I'm talking about, because some of you probably don't realize what I'm talking about there. So the best way to look at it is in the dollar. If you go to the dollar, just give it a second. Sorry about that. I should have had it up already. If this is, you can see how the dollar pulled back here, okay, and we're calling that an important low, okay. And if this was the first move, this move right here, off this low, of course this move was more complicated, right? It moved up and it pulled back, but this could have been the next move up. This could have been the next move up. So sometimes it can be quite complicated, but eventually what happens is once you have that first move, you get a really strong, the third move. In this case, it's not really the third, but I'm calling this, it's kind of semantics, but you have to kind of understand what I'm calling this. I'm calling this the first move. Whoops, that's not going to work. No, it wants to. Sorry about that. It wants to. For some reason, it won't anchor there. Okay, so if this is the first, it won't let me do that. Having all kinds of issues here with the technology. So if this right here is the first move, and this whole thing back to here was the correction off the first move, then what I'm saying is this next move is pretty significant and will ultimately, it's going to pull back a little bit here, probably into this 90 area. But ultimately, this is going to take out this high. This third move up is usually pretty significant. So that's what I'm talking about there. So yeah, it's true. This could come up, pull back, come up, and then kind of go, or it could just go right from here. But if this is the low, the only point I'm really trying to make is if this is an important low, and this is the first move off the low, and this is the first pullback after the first move off the low, then this next move up could be quite significant. And in fact, we're probably going to have to look out 10 years to see where this is likely to stop. Probably in the 5% range is what I'm guessing. The Euro Swiss franc, that's interesting because that's where that surprise central bank move came out of the Bank of Switzerland. You can see that it's rallied back quite a bit, about 50% of its move. Usually this is these initial reactions tend to be overreactions, so you get some snapback, but then it either rolls over and continues, or it just kind of chops sideways with a slight down bias. If you look at the euro, U.S. dollar, the euro, continues to look very weak, although we're in this support zone from. Actually, let's go back 10 years. You can see this support zone is off of this low right here that I have highlighted in yellow from 2006, the end of 2006. So we're at, 2006 kind of lows in the euro, and we're in the oversold area of the RSI, but oversold can stay oversold for a long time. So looks like the euro, I'm sure we're going to get a bounce in the euro. There's no doubt about that. But probably any bounce you get in the euro is probably going to be met with some selling. So, we might kind of go up like this and maybe to this underneath of this line, and then probably it could actually be complicated, like a kind of a converging triangle, kind of like what we had in gold, and then maybe down. So maybe down here somewhere. So it's crazy in the euro. There's a lot of politics going on there with Greece. I think I've got there was an article in Zero Hedge talking about Greece and how the people have elected this new ruler to basically come in there and thumb his nose at the people loaning money to Greece. And it's just kind of interesting how people don't want to pay back this money, which is not unusual, I guess. Anyway, let's look at Germany. Germany continues to look a little stronger, although it looks like it's trying to make a little shooting star here. Shooting star is just a candle pattern. When you get a long tail at the top and the bears pull it back, that's if next week we get a close below here, then that means there's probably some selling in the future for the German market. I don't know if this is the DAX or if this is the economy. I'll show you a picture of the DAX here in a minute. We can look at that. Japan still seems to be in a sideways pattern. We've been talking about Japan for a while now, and it's been in a sideways pattern for a while. I can't get it to come up here. And until it breaks out of this sideways pattern, probably not much to do in Japan, and maybe it's going to break out here. There was a huge sell-off in Japan around this Abenomics, and so they basically switched from deflation to inflation, and maybe the market, Japanese market, is going to take off. So basically, what happens is if the Japanese market is valued in yen, and yen become less valuable, then the market goes up because it takes more yen to buy the value of the market. Think of it like that. And so the appearance is that the market goes up. But the problem is, it's just the yen going down. It's not the value. They're not really creating wealth. They're just creating yen, and then it takes more of that yen to buy the existing wealth. So that's kind of the way you got to think about it. If you look at the UK, broke that trend line here and pulled back to the support, and looks like it's bouncing. I mean, we might see the UK get up, into this area. Whoops, did the wrong thing there. You might see the UK get up to the underside of this trend line and then roll over. It's kind of strange because we have these channels and these patterns and things like that, but it seems like lately normally the channel, once the channel's broken, the market tends to consolidate lower, and then it might come up and take the channel over. But it seems like in a couple of markets we've been seeing it break the channel and then come back, back into the channel and actually slightly above it. So I don't know. It's just to me, the U.S. markets feel very toppy, but I really can't speak to that in these world markets. Although, excuse me, when we look at the global Dow, which we'll do right now, the global Dow is only made up about 40% of the U.S. market, and it looks kind of like it's wanting to kind of just slowly drift and roll over. Excuse me. Although it's kind of in the middle of its range right now over the last 10 weeks. So markets, they tend to come to their senses slowly. So it's not like these bottoms where the bulls come rushing in and you got to get on board quickly, or you're going to miss a lot of the move. The tops are usually a little bit more telegraphed. You just can't be caught up in the emotion and the rhetoric of how great the economy is and all that stuff, because the markets are futures of the economy. So the market, when you look at any kind of market, whether it be the S&P 500 or the Dow or whatever, it's a futures market. So it's looking at, it's trying to look at what the value of the market will be in the future, not what it is today. So that's why a lot of times the economic data doesn't show up for another 6 months after the market moves. That's why the news is really not very useful to trade on or even to invest on, because it's usually in the rearview mirror and it doesn't tell you anything about what the future will be like for the money that you're putting at risk today. So in the technical analysis, the difficult thing about investing, there's a lot of difficult things, but one of the difficult things is knowing information. You can't possibly know all the information you need to know to decide whether something's a decent investment or not. So a lot of where the technical analysis comes from is just there are other people that are investing, lots of money, and their actions show up on these charts, and you're simply just you're basically doing what they do. So, for example, let's go to a 9-month chart here, and we can look at the S&P 500, and you could look at this right here, and you can say, okay, here's a low, and we ran up, and And then right here, we pull back to a low, and then, I mean, it's a higher low than this low, right? So what that's telling you is the market participants are happy to buy the market right here. And so you get on board and you make this move up. So, and then that's all the other part. Basically, what you look at is you look at price action. Trend is probably the most important. So trend, and that's only because once a trend is intact, it usually stays intact until something changes. But if you always want to identify the trend because you want to be investing in the direction of the trend, not opposite the trend. It's easier to make money in this move here than in this move here because this move, if you think about it, let's look at this move right here. Let's say no matter where you decide, like if I decide here to get on board with this trend, let me zoom in a little bit. Okay, let's say I decide to get on board with this trend right here. Okay, well, let's say I want to be a little bit more conservative and decide to get on board right here, or right here. See, I mean, I have lots of places depending on what my risk tolerance is to get on board here. Now, on the flip side, if you go over to this area, let's just look at this section right here. I can get on board with the trend right here, okay, right here, or I could get on board and say right in this area. But you can see the longer I wait, the less the reward is down this way for me. So that's typical of counter trend. When the market's breathing in, it's going up and up and up, and when it breathes out quickly and then starts breathing in again. So there's just not counter trend. There's just not a lot of room to be hopping in and out. Whether you're hopping in and out of your 401k or you're hopping in and out of the SPY or whatever. So that's why trend is so important to establish. Is we want to make sure we're investing in the direction of the trend, and so we want to identify that trend and then make sure we invest in that direction. Let's go over to the NinjaTrader platform real quick and look at gold long term. I had this double channel, downward channel drawn on gold, and you can see here we broke out of this channel right here on the upside pretty strong, and now it's pulling back. And so a lot of times what will happen is when you pull back to a channel like this, it'll come back, it'll retest this, and then take off again. Okay, so you want to look for gold maybe to pull back a little further. It could pull all the way back to here. It's possible. It's not as likely, but it is possible, especially on the first move out. If this is the first move out, it could pull all the way back to this point and then take off. But typically what you want to do is if you're looking to buy gold and go long gold, what you want to do is you want to make sure you see it pull back to a higher low. Okay, so wherever it stops and starts going up, you want it to make sure it's higher than this low right here. Okay? And that will greatly reduce your risk. Does it mean you're guaranteed to make money? No, there are no guarantees in investing. But I just wanted to point that out in gold because there's a lot of focus on gold. Now, every day that you're hearing these governments around the world print money, there's more and more focus on gold. Sorry about that. Phone went off. So we have oil up here, and you can see. Well, you could see before, but there's a pretty big slide in oil, 60% or so. And what we're looking for oil to do is kind of chop its way up into this area around between $70 and $80, and then probably roll over and actually make a new low lower than this previous low. So a low below this low right here. And that's likely to take some time. Let me get out of this mode. It doesn't work as well with NinjaTrader for some reason. Let's look at the bond market. We already looked at the interest rate. This is opposite of the interest rate. So if interest rates are going up, then bonds are going down. This is the ZB, and it's the continuous contract for the ZB. And you can see here, since really, the end of 2013, bonds have been on a pretty good tear, and especially here recently, from October to just recently. And the question, I guess, is this it for bonds, or are bonds going to, take a breath and then try to make one dash higher? And the answer to that is I have no idea, but there's a lot of risk here in bonds. So just again, I've been saying this all along this way up here. Be careful in bonds, and use this area where you've been making money in bonds to slowly, divest yourself of bonds and get out of those funds, because those funds are going to lose money. And my fear really is that it's going to be a pretty rapid loss of money. I mean, one of these things where you check your account balance one day after you get your statement in, and then the next quarter when you get your statement, you're going to have lost like 30% of your money. I mean, it's going to be that fast, I fear. So that's why I've been cautioning about it. Of course, so far, we've been wrong about that caution, but I think I've established in previous presentations about why there's so much risk in the bond market and how that risk is not worth any reward that you're making there. So anyway, let's see the euro. We can look at the euro. This is the 6E. This is the future on the euro, and you can see it's just been a brutal move since about May, just almost straight down. And a lot of people think the euro is going to parity, equal the dollar, €1, $1. I have no idea, but it certainly looks probable at this point. I think the euro is due for a bounce. It's way oversold, and I think you could see that bounce coming into this area, this 124 area, and then roll over and make a new low. I've got the ES here, which is the S&P 500, just on a shorter time scale. Well, let me go to a daily chart real quick. A while back, I don't know, a couple weeks ago maybe, we got a DP in MT Predictor, which is a decision point signal. It's I don't know why it's running so slow. My internet is very slow today for some reason. I apologize, everybody. Just give it just another second here. It should pull up. Probably should have tried to pull that chart up earlier. What I've got here, the reason I had that red line there, so here's the DP. Let me just stop and talk about the DP. So the DP, in this software that I use, it basically is kind of predicting the end of a trend, and so it's saying that this was the end of this trend. And usually, if I do the analysis here, I click right there on that sell bar, it shows that the target is down here around 1947. Now this is on the ES, so that's not 1947 on the S&P 500. That's on the future. And they're usually within 5 points, so you're talking about a number close to 1945 or something like that. But you can see that we went pretty far down in that area and then rallied back up. This is why I was thinking we probably would get a new high. But now when I look at this shorter term, when I look at the 60-minute, to me this looks very like sellish, like like it's time to sell this market. And that's one of the reasons I had this red line here, is because I was expecting it to get just above this red line and then sell off, and it actually did that. So what that's telling me is that this move down was an important move, and all this was just consolidation of this initial move down. And I would say that if we take out this low here and close below this 1950 area, so let's just put a DP on this low here. So if we actually see a close below this DP down here, so it'd be more like 1925, I think you could see the next move up being a lower high for sure, and then we get a significantly lower low. So all that's conjecture, though. I mean, I have no idea. It's just you gotta, when you're trading, which is what I do a little bit more of. I know you guys don't do that, but you have to have some sort of plan. You have to say, okay, this is where I'm going to get in, and I'm going to go this direction. But if I get in here and I go this direction, and it quickly goes back this way and takes out this high, then I'm out. That's kind of how you do it. You basically have an analysis that tells you that you think the market is going to go a particular direction, and you have another place where you say, this is where I'm wrong. So what I'm doing is I'm bringing a little bit of that to this program, except we're mostly using weekly charts. So we're still using trend, we're still using lower highs, lower lows, and we're going to use trend to determine when the trend has changed and when we need to be out of certain markets and in other markets, things like that. So that's kind of the plan. So bringing kind of a trading technique to the middle class investor, but trading on a very large time scale compared to what most traders are actually doing. I guess that's about it this week, everybody. If you have any questions or you want to comment on the program, just go to YouTube, search on Middle Class Investor, and you can leave a comment in the comment section. Or you can find us on @InvestorClass on Twitter. And occasionally, if I see an interesting article or I see an interesting video, I'll post it on Twitter. It's real easy to do, so that's where I do it. I like to go to Zero Hedge. Zero Hedge, I think, has some interesting articles, and it's not the mainstream finance media, which I think is really just empty space between commercials, really. I mean, I watch it in the morning when I'm getting ready, but that's because I'm not watching it very closely, and they have the announcements and things like that. But really, Zero Hedge, David Stockman's Contra Corner. Maybe I'll make a list of sites that I think have really good articles that you can read, intelligent articles, and post them, or just if you follow me on Twitter, just start making a note of the ones I post from. They're really some of these guys are some of the smartest guys in the world, and they're never on TV. Nobody ever asks them any questions, or if they do, there's just an agenda on TV. They don't want anything negative. They don't want anything to be said that could be construed as negative for the markets, and it's just kind of a weird thing. But and I think a lot of it's potentially maybe to run cover for government, and so government and media can kind of work together to keep us asleep at the wheel. But anyway, that's really it for this week, guys. If you have any questions, just comment on the show, post it, and we'll try to get those answered and present them on the next show. All right? Thanks, everybody, for coming in. Bye-bye.